May profits be upon you. Welcome to another weekly Forex forecast. We're looking at the pound USD in this video. The pound USD. Take a look at the weekly time frame. All right. What we can see, it has broken structure to the upside. Right. Boom. Okay. Let's put that like that. All right. And that is just a strong indicator that the market is bullish, right? And that we have a strong currency. But since it's taken this high all the way over here, all right, January from January 2022, since it's taken that high, it's been bearish for 3 weeks, including last week's close. Now, what I'm looking at in this price action is this candle right here. This is the one that took that high, right? Now, the next one did take out the high of that, but this strong institutional candle has a bottom here, right? And for 3 weeks, we've been making our way towards it. And I said last week, I said, if we take this low, that'll turn this into a change in the state of delivery. So a close next week below this low would indicate more bearishness to come, and that exposes this low right at 131.5, 31.50, and this this area. Now, what's significant between this low and this low? What is significant there? You see that red dotted line I got going across the screen? If you go to the retracement tool, the Fibonacci retracement tool, you'll see that from this low to that high, that dotted line is the 50% of this trading range, all right, which divides premium prices up here from discount prices down here. And you want to take your longs from discount, you want to take your shorts from premium. This area is also covered. Let's see, where is it at? I lost it. Okay. All right. What we can see here is a area of demand, or an area of fair value, but it's a demand zone, right? Where there was a price gap. It gapped open and pushed and closed that gap here, giving us a nice area of demand that, if price was to come here, would probably give us a high probability trade to the upside. This is going to be a significant area of support, in my opinion. Now, barring that, let's go to the monthly, and what you can see. Let me get rid of this thing so you can see it clearly. Is right before that is a, a monthly demand zone. I mean, a monthly fair value gap. Okay, I like this fair value gap. All right, we're above this sell to buy wicks, which is the zone I just described, where we're going to find demand at. Wrong. God dug it, man. I'm going to get this right. All right, we got an area of demand with a fair value gap leading to it. All right, I like this as a point of interest. I like this as a target. But how are we going to get there is the question. If we go back to the weekly, how are we going to get from this low down to this area where we might find ourselves in discount, where we can take a high probability trade to the upside? Let's go to the daily, and now we can get our narrative right. Uh, what you can see is last week, this is Friday's candle, this is Thursday's candle, this is Wednesday's candle. Reached up, and then we had this. It's just moving to the side. But what we can see is that the market is bearish, right? And along with that bearishness came 1 and 2 bearish fair value gaps. That just shows you where the order flow is. And what happens is we took out a great area of demand, which was seen here. All right. Well, you saw the reaction to it, and then price started to disrespect it and finally did close below it. All right. So we have bearish momentum. We have bearish order flow. All right. And you see the respect wicks once price came into contact with that bearish fair value gap here. It tried to go back up again and again. It was forced back down by sellers. Sellers are defending. Are we going to head towards these lows here? Is that the intent of price? It certainly looks it. And I'm bearish in this market, period. All right. We have a untouched bearish fair value gap that if price was to pull back, uh, because I expect a small pullback uh, in the US dollar, all right, if that happens, that will allow the pound to show some strength. But I think that's going to be very short term, maybe a couple of days, and then we're going to see the resumption of the bearish trend in the pound USD, and the inversely the US dollar will continue to move higher. That's what I'm expecting this coming week. If we look on the 4 hour for a quick look, again, the question is how we're going to get from up here down further. And what we can see on even on the 4 hour, we have a 4 hour fair value gap, right? We can use that of the market can use that 4 hour fair value gap to push for lower prices, coming towards these ascending lows here for liquidity. And once we get down here, which we were at already, all right, with this we swept, we generated the market generated liquidity, sell side liquidity on the way up, and then we can come back and take it out. If we come up here, this will be a higher probability trade to the downside. That's what I'm looking for. So I'm gonna watch this fair value gap right here, all right, and see if it holds on the 4 hour and comes after the sell side liquidity. Yeah. All right. If it doesn't, I'll wait patiently for price to take out this high and this high. Because what are we looking for? We're looking for IRL to ERL, the ERL to IRL. That means from external range liquidity, which we just took here, to internal range liquidity, which would be here. We can come back up to here, but this one has been used. This one has been used already. This one hasn't been touched yet, and this would correlate with the short term weakness in the U.S. dollar index that I foresee coming. So I'm really looking for this spot. That'll be a high probability trade to the downside, in my opinion. Okay, I hope that you enjoyed the video. Hey, go ahead and check out the analysis I already put out for the US dollar index and the Euro USD. I just put this pound USD out. The next one will be the Aussie dollar USD. I will see you in the next video. Thank you for watching.